Hi, this is Carl, and once again, I'm very happy to have Rayanne Buchianico with us. How are you today?
I'm doing well. Thank you for having me here today.
And thank you for taking time at the beginning of tax season, because I know as an enrolled agent, you are super duper busy. So
January is probably the worst month of the year. And we are almost out of January, so we're doing okay.
So this year, more than anything, probably in, 8 years, there's massive changes. And I was just, talking to somebody about how I don't even know what I'm going to do with my own company this year. But I wanted to start with 1099 since they're due like in 2 days. Is that right? Or 3 days or something?
6 days. 6 days.
6 days if you file them yourself. But if I'm using QuickBooks Online, so it says, we have to have it done by the 27th in order to get it to the feds by the end of the month.
Absolutely. So there's a January 31st deadline on it. But I'd like to talk about the different types of 1099s and why we even do them.
Okay.
So the whole point.
Wait, stop. We forgot about you. First, let's talk about you. So you own a managed service business. Give me your elevator pitch here.
Okay, so I'm Rayanne Buchianico. I'm the owner of ABC Solutions. We're based here in Clearwater, Florida, and we are an accounting firm that specializes in working with IT service firms around the country. So we do full service bookkeeping, payroll, sales taxes, income taxes, and full service bookkeeping and accounting. And that's who we are, and that's what I do. I have over 30 years of tax experience. I'm an enrolled agent, which means I'm eligible to practice before the IRS, all the way up to, but not including, the tax court.
Not just that, but you can show up with the IRS and I don't have to.
That's correct. I would not even invite you to the meeting.
Oh, nice. Well, that's because you've actually talked to me about my finances and you know how messed up they are. So, all right. So let's get back to, so thank you for that. 1099s. First of all, what is a 1099?
A 1099 is a statement that tells the IRS how much you have paid another person or business in business transactions for a certain period of time, which is always the calendar year. Now, there's different types of 1099s. You've got your 1099 dividend, which you will get if you have investments. 1099 interest, which would come from the bank for savings accounts. And then there's also the dreaded 1099 miscellaneous. Now, the 1099 miscellaneous, that's for all miscellaneous business transaction payments. Now, the purpose of this is that you as a small business may pay me as another small business for providing services to your company. Now you want to deduct that payment on your income taxes. Now in order for you to be able to deduct that payment, somebody else has to claim the income. So the 1099 miscellaneous form is designed to report your deduction and to make sure that the other person stays honest and reports that income. That's the purpose of it. So 1099s are not optional because if you paid somebody over $600 and you fail to send them a 1099, then you don't get to take that deduction because then somebody else may not be claiming that income.
And it's $600 for the year. So if I paid you $100 a month for 6 months, I would need to do a 1099 that says I've paid you $600.
Absolutely. Correct.
So this is where people get in trouble, politicians mostly, that they don't claim, they don't give 1099s to people who work for them, to the people who clean their houses, mow their lawns, all that kind of stuff. But they want to take it as a legitimate deduction.
Correct. And you cannot have it both ways. So
you can't what?
You cannot have it both ways.
Right.
You don't get the deduction without forcing somebody to claim the income. Now, however, on the other side of things, I run into people all the time, and they say, I can't do my taxes. I didn't get my 1099 yet.
Right.
Now,
but that's not true.
Of course it's not true. You are required to report your income, all of your income, whether or not you have received documentation from a third party.
Right. And that's where the mafia get in trouble. They don't claim all of their income.
Right.
So my tax guy, Hank, always tells me, right, it doesn't matter if you get your 1099s or not. You need to know what your income is. So you need to track that accurately. But, you and I were just talking that this tracking, it is not easy and obvious. This is my first year with QuickBooks Online. And I 100% guarantee to you that 100% of what I did last year with regular old desktop QuickBooks was accurate. With online, everything is different. And when I first started looking at doing 1099s, I checked the box and only like 3 people showed up. So I'm like, okay, so now I got to go find my vendors and I got to check the box that says track this for 1099. Then I got to go and the money wasn't all right. So then I had to go through all of the items and say, this is an item you track or this is an account you track. I don't remember what it is, but I had to go back and basically check enough boxes until the 1099s came up to the right amounts.
Right. So yes, there's certainly a learning curve with QuickBooks Online. I will grant you that all day long. However, on some things it might be easier because there's just that one little checkbox. Track this vendor for 1099. There's no more mapping to the different accounts. Remember in desktop, you would have to go in, you would have to set up the mapping, and you can't send a 1099 because they're not using the proper expense account for 1099s. So there's give and take on both sides.
But I can pay you for different things. And a perfect example is I might send you a royalty payment because of a show that you recorded a long time ago and I sell it, right, for whatever, $10, right? So you get 5 or 3 or whatever it is. And, so now that's a tiny little thing, but I also pay you for teaching classes for me. So there's royalty payments, which would go in one box on a 1099, and then there's labor payments that go in a different box, right? So, but I have to track both of those. And you may do work for me, or might you do work for me that's not trackable on a 1099?
Generally not.
So you either are or are not tracked.
Correct. The only time that you might not have to report payments on a 1099 is if you were reimbursing somebody, penny for expenses. So you hired this independent worker and you sent him out on a job and he comes back with an expense report and you write this person a check for the exact amount that's on that expense report. There is no filing requirement for that.
Okay, so that makes sense. So Nancy does sales for me. I pay her a commission. She gets a 1099 for that. But she also goes to a conference, spends money on a hotel. I reimburse her for that. That's not a 1099 event.
The trick to that is, or the answer to that is who keeps the receipts? If Nancy keeps the receipts, then it's Nancy's expense, and you should 1099 her for the full amount, and then she will take that deduction on her Schedule C.
I see.
If you keep the receipts, then it is an expense for Great Little Seminar or Small Biz Thoughts, and then you get the deduction, and you keep the receipts, and then it does not become income to her.
Okay. Is there ever a case where a managed service provider would get a reimbursement from a client, but it would not be taxable as a 1099 expense?
That is probably, it would happen. Although generally, all payments will come through on the 1099 because the MSP is already tracking the expense. So you buy something, and I know that there's a lot of IT providers out there who do not mark up any of the products, that they sell. So you could stick them into reimbursable expenses in an income account and then receive the reimbursement and stick it into that same reimbursed expenses income account, and they would offset each other. There should be a 0 at the end.
Is it generally the case that if somebody is in a small business, they own their own business, whether they're a sole proprietor or SCorp or whatever, is it generally the case that they're going to always receive more money than they're going to receive 1099s? Like if you add up all your 1099s, it's always less than the amount you actually received?
Almost always. If not, if you only have one 1099, that means that you don't really have a business. You have a job. And then we could be having a different conversation, the worker versus employee conversation.
Right.
So, but not every one of your customers is either going to pay you over $600, and not every one of your customers may send you a 1099 at all. As a matter of fact, if you are a corporation, you are not required to send a 1099 to any corporation. That's why we don't send 1099s to Verizon or to the electric company, or to the big corporations, because they are corporations, and corporations in the eyes of the IRS are deemed to be more trustworthy than human beings.
Second only to politicians.
So it would be too burdensome to make every small business send a 1099 to every vendor that they do business with.
So that's interesting. So it was maybe 2 or 3 years ago, all the news stories were full of this thing where you're going to now have to have 1099s to the grocery store, the car fix-it place, and all these other things. Whatever happened to that? Was that just like radio talk show BS, or was that a real proposal?
That was actually a real proposal. And then it became really confusing, because now you have all of these social media payments, right? So just like you may pay a vendor with a credit card, and because it's on a credit card and that person is receiving the payment from his or her merchant, if you send a 1099 and the merchant sends the 1099K, now we've duplicated the same payment to the taxpayer. So they had to draw the line. Anybody that you pay with a credit card or through PayPal or Venmo or any of the other payment systems out there, you are not required to send the 1099 because the merchant is now in charge of that. Now there's a big...
Oh, that's interesting. So PayPal will send me a 1099 at the end of the year?
PayPal would send you a 1099K, and there's the loophole, because there has to be greater than $20,000 in 1099K payment in order for the merchant to send the 1099K.
Oh, so instead of 600, it's 20,000.
Right. So there's this big gaping hole between $600 and $20,000.
Okay. So if I send you a PayPal payment of, say, $700, I don't have to send you a 1099, and PayPal doesn't have to send you a 1099.
Correct.
Okay.
But I'm still a small business, and I still need to report it.
And kind of like over to the side, there's some rule about me sending you $10,000 that other things have to be reported. And that's completely outside of the 1099 thing.
Right. And that was thanks to the Patriot Act back in 2000 and whatever.
Thank God you exist, and I don't have to think about all this stuff except when I'm interviewing. So just skipping ahead a bit, if people are not corporations, if people are watching this and they're sole proprietors, that means they're using their own tax ID as their company tax ID. Mm-hmm. Should they send W-9s to everybody who's on their client list so that they have that tax information and can send them 1099s?
So the advice we give to our clients is, when you hire a new vendor, whether it's a subcontractor or somebody like that, do not issue the first penny without receiving a completed W-9. Because if the relationship goes south and you start working together in April and you stop working together in June, by January, if you're trying to get the W-9 information, you're scrambling, you can't get it, they're not returning your calls. Do it before you issue the first check.
And let's say that somebody doesn't send me a W-9, but on their invoice, it says at the bottom, my tax ID is 1, 2, 3, blah, blah, blah. Mm-hmm. Am I good to go to use that to send them a 1099 at the end of the year?
Absolutely. Yes.
So I don't need a government form. Correct.
The W-9 is for your convenience. It doesn't go anywhere. It stays in your files. It's just a very official looking form that says, hey, give me your name, your address, and your tax ID number.
Right. I actually had an issue with spam filters not letting somebody send me their W-9. It just literally got vaporized because oh nope, this has got a social security number on it, and it nuked it.
Oh, and, right.
So finally, I just said, just leave me a voicemail with your tax ID number.
There are some out there, I think Reflection users. Reflection will, look at the email. If it determines that there's any personally identifiable information on it, they'll automatically send it secure.
Right.
And so
and some of the HIPAA filters and other things do similar kind of stuff. Like they look for things like social security numbers.
Right.
So again, to the sole proprietor watching, do I have to use my personal social security number, or can I get a tax ID so I'm not broadcasting my social security number to all of my clients?
So that is a great question. Yes, you can absolutely get an employer ID number. And as a matter of fact, you are required to have an employer ID number if you start to hire employees, your first employee. You cannot be an employer with a social security number. That's the whole point of the employer identification number.
Right. But if you never have an employee, you can still get an EIN?
Absolutely. Just because you've started a business or for banking purposes or for, there's a whole long list of reasons why you may want or need an employer ID number. And it's always a good practice, especially if you're an LLC. You can be an LLC in your state, still file a Schedule C on your personal income tax, but you could also just so now you have the protection from the state for the liability, and then you get an employer ID number, and that protects you personally.
And I know we hear all this stuff about ransomware and all this happy stuff, but is there really a problem in the 21st century of me giving people my social security number? It's kind of everywhere, right? You could probably Google it and find it, right?
I don't know that you could Google it. I think I've tried a few times for people that
Google my social.
No, not yours. But somebody who I really wanted to send a 1099 to that refused to respond. So no, I don't know that you can find it. But there is an awful lot of tax fraud going on, and I think that the IRS is going to move more toward starting to use PINs instead of social security numbers. So currently, if you are a victim of tax fraud, somebody tried to file a tax return in your name last year, the IRS will determine that there was tax fraud, and then they will issue you a 6-digit PIN that you can use in place of your social security number when filing the return, so that the person who stole the number last year would have to know the PIN before they could file for you again. So, and I think that we're going to see more and more of that. The tax software is very security conscious right now. Every time I log into my tax software, I've got a 2-factor authentication, and I have to change my password every, 45 days.
Right.
And I'm the only tax preparer in the office. It's crazy, but, I don't make the rules. So.
Well, I'm glad that you as a tax preparer are protecting my data, right? I mean, obviously I have an interest in you having a difficult life.
Thank you. Yes, and we appreciate that. But
okay. So now that we've, I told you the half hour is going to zip by. So now we have to talk about the tax law, the big changes in the tax law. So what do I need to know for this year? Should we all become C-Corps or S-Corps or
That is the number one question I have heard more than anything else over the last 30 days. Let's talk. Do I need to become a C Corp now? And the answer is probably not.
Oh.
And the reason I say that, yes, the C Corp rate went from 35% all the way down to 21%, and that's great for C Corps. But I'm an SCorp. You're an SCorp. So that doesn't help us at all. But what does help us is the pass-through deduction. So let's say you've got an S corporation, and your net income for the year was $100,000. Now, when you move that over from the S Corp onto your Schedule E, there's an immediate 20% deduction. So that means that you're not paying ordinary tax on the $100,000 any longer. Now you're paying tax on the $80,000.
Okay, and this is a new thing?
This is brand new. This came out with the Tax Cuts and Jobs Act.
So I'm only being taxed on 80% of what comes over as profit.
Correct. There are some limitations. But you really have to have a lot of income. And I think for a married couple, the limitations kick in around $317,000. For a single person, the limitations start to kick in around $157,000. So, but for those small businesses that are not netting, $200,000 or $300,000, you're going to get that 20% cut right off the top now.
And is that completely separate from my personal deduction? Because I then get there's a standard deduction that human beings get.
Correct. There's a standard deduction which is now increased because the personal exemption goes away on your personal tax return. So they took the personal exemptions, which was the $4,000 per person, and they yanked that, and then they increased the standard deduction, hoping that it would allow fewer people to itemize. Not that itemizing deductions is very complicated, but I guess some people think that it may be.
Some people are not, enrolled agents.
That's true. It's true. But there's some more reasons why you may not want to jump quickly into the C corporation. So as an S corporation, before I even get to that, I wanted to point out one more thing. Two types of pass-through organizations, which is the Schedule C or the sole proprietor, and the general partnership, the partnerships filing 1065. They will get the 20% deduction, but it will not reduce their self-employment tax. So it will reduce the tax for their overall ordinary income tax, but the self-employment tax is going to be taxed at the full amount. So keep in mind, if you are subject to self-employment tax, that the 20% is not going to reduce that. Okay.
But the world is, this is the thing. I always ask a simple question with taxes, and then it becomes like this massively complicated answer. So if you're a corporation, you can pay yourself a salary, mm-hmm. and that limits your self-employment tax. But you still take whatever the profit is. You've actually reduced your profit by whatever you paid yourself in a salary.
Right.
But whatever is profit, you lop off 20% before you look at what's taxable.
Correct. So yes.
So you might actually, depending on where you fall between the 20% and the 14 or 15% self-employment tax, you might adjust your personal payroll. You
could, but those limitations include wages. So yes, you can bump up your wages all day long, but if you're still over those limits or those threshold amounts, then those limitations will come into play.
So far, and I know that the tax year is young, have you seen anybody where it made sense for them to flip over to a C Corp? You can make that election like once every 5 years.
You can make, once you make that change, you're stuck with it for 5 years. So don't jump into it, in a hurry. So the higher earning S corporations may do better by switching over to a C, but I want to caution people before doing that, because C corporations are very structured, and there are only 2 ways of getting money out of a C corporation. You can pay wages or you can pay taxable dividends. There are no other ways to get your money out of a C corporation. So in S corporations, you can take your salary and you can take profit distributions. So that means that you can pay your mortgage, you can, go to the grocery store, and you can push it all through shareholder distributions. And that becomes part of the distributions of profit. In C corporations, there's no such thing as a distribution of profit because the money doesn't belong to you anymore. Now it belongs to the corporation, and the corporations are infinite. So there's no beginning, there's no real end of a corporation, and there's no human factor in a corporation. So when I say that the corporations are so far more structured, there's a lot of very strict rules that you have to follow. So before you go jumping, and getting all excited about that 21% tax rate, think about what you're doing before you do it.
Right. Well, I mean, at the end of the day, what my guy, Hank, the tax guy, always tells me is, if you make a decision specifically to avoid taxes, it might not be allowable by the IRS.
That's a very good piece of advice.
I mean, you should always legally reduce your taxes as much as you can, but don't make structural decisions about your business just to avoid taxes.
Right. I agree with that. I would agree with that.
Sadly, we are out of time.
Gosh, and there's so much more I could tell you about
I know.
But I will likely blog quite a bit as the IRS begins to interpret and issue guidance on some of this new law. So it took them all year to write it. It took them a day to pass it. And now we've got to wait another 6 months until the IRS, can interpret it and issue guidelines.
Well, I literally don't know how your tax software could be up to date at this point.
Well,
right?
That's because there's no changes in 2017.
Oh, okay. All right. Yeah. So it's only the advice that has to change. It's not last year's taxes. Okay. It's just the advice for next year. Very good. So, hey, I know we talked about doing this quarterly. You can come back every day if you want to, if you've got more stuff that you want to cover, but I know that you actually have to make a living. So you're welcome back next week, the week after, in a month, 2 months, whatever makes you happy.
Well, I always enjoy jumping on a podcast with you, Carl. So thank you. And I may take you up on that, but it might not be until after tax season. Okay.
One more commercial. You are teaching some classes for us this year. Why don't you tell us just a little bit about those?
Okay, great. So I've got 3 classes this year. Coming up in just about 2 weeks, we will be starting the financial processes for IT service firms. And that is not a QuickBooks course. It's not, it is a, how do I manage my finances and my accounting and understand the numbers that are coming out of my books. So if you want to, maybe redo the way you are accounting for things, tracking different metrics, we're going to get into tracking cash flow. We're going to get into service level metrics, understanding the balance sheet and the P&L, and a number of other really cool topics for just finances. It's not a QuickBooks course.
All right.
Then later in the year, we do have a QuickBooks course. Well, the other 2 are both QuickBooks courses. So we've got QuickBooks Desktop for IT service firms, and that will be in June is when we start that class. And that is going to be all around QuickBooks Desktop. And each time I do this class, I update everything so that you are looking at the most current version of QuickBooks. And so, and this year will be no different. Plus, we also, I will be incorporating some third-party reporting software that you can use to really, hone in on your KPIs and service level metrics and all of that. So
excellent.
And then later in the year, we will do, it'll be our second time for the QuickBooks Online, automating your accounting with QuickBooks Online and third-party apps. And there's so much automation. And as a matter of fact, every week I'm finding a really new cool tool that we can use, to automate things. And so we push the information into QuickBooks Online. We've audit-proof all of the transactions in QuickBooks Online. We automate the accounting, we automate the reporting, and I show step by step all of these different tools that you can use to make bookkeeping and accounting less painful.
Very good. Well, and just so people know, your classes are frequently the best attended classes of any that we do all year. Now, that won't be the case this year because I released 2 new books. I cheated. And so I have 30 or 40 people in each of my classes this year.
Well, I aspire to 30 or 40. I think my top was 27.
Oh, I think, really? I thought it was, well, maybe. So, well, but you're always kicking our butts. So, Josh and Manuel and I are like, oh, no, I want to beat Rayanne.
Well, now I want to beat Carl. So it's a competition.
Oh, yeah, may have to wait till next year. So anyway, these classes are always extremely popular and we get literally raving reviews from them. So thank you for doing them. Thanks for, doing this. I know that I'm not paying you for this, but I really appreciate the information. And it is really great for people who are small businesses trying to figure out what they're supposed to do this year.
Right. So anytime I can help, please feel free to reach out. I'm always there to help you, help your readers, and always, my email's always open, and I try to get back to everybody as quickly as possible. So
very good. And we're going to put your links down below so that if people want to get in touch with you, they can. And, the one thing you didn't mention is that you also own an MSP and you are Autotask certified, and you really know the stuff with both managed services and accounting, which is huge.
So yes, and that's what we do here. I mean, we are probably 80% IT. Our clients are, I would say, 80+% are IT firms. So we are specializing in MSPs and what they do. And I don't know that there's many other accounting firms out there who do what we do.
Right. Well, very good. Thank you very much for your time. I sincerely appreciate it, and we will talk to you again.
Okay. Thanks, Cara. Have a great day.